All right, let's dive into a high-stakes financial puzzle that plays out against a ticking clock. For investors caught in this exact situation, timing isn't just important, it's literally everything. Okay, picture this for a second. You've just been handed a golden ticket, a special right to buy something really valuable for cheap. Now, you don't actually want to buy the item, but you can sell the ticket itself for a nice little profit. The catch? The ticket has a very real expiry date. So, what's your play? Do you sell it right now, or do you wait? This is the core puzzle we're going to solve today. So before we can even talk strategy, we need to understand what this prize actually is. Let's decode this so-called golden ticket that's at the heart of our story. In the world of finance, our ticket is called a Rights Entitlement, or just RE for short. It's a special privilege given to people who already own shares in a company. It lets them buy new shares, but at a fantastic, discounted price. It's the company's way of raising cash while giving its most loyal investors the first shot at the deal. Now, every single one of these rights has what's called a theoretical value. Don't let the fancy term scare you. All it really means is the built-in profit, the instant, on-paper value of the sweet deal you've just been handed. It's the potential profit you're trying to lock in. And get this, calculating this value is surprisingly easy. You just take the current market price of the stock, subtract the special strike price. That's the discounted price you get. And boom, that difference, that gap right there, is the theoretical value of your right. It's the prize everyone is chasing. Okay, so you've got this valuable right. Now, the real game begins. As an investor who just wants to sell this thing for cash, you basically have two paths you can take. And believe me, both are a serious race against time. This all plays out in what's called the trading window, the short period of time you have to sell your right. And as you can see, not all days are created equal. You've got the early window, where things are pretty stable, a quiet middle period, and then you hit the danger zone. This timeline basically creates two very different types of players. On one side, you have the pros, the big institutional flippers. They act fast. On the other side, you have what the market sometimes calls lazy shareholders, who have a habit of waiting and waiting, often until the very last minute. The tension between these two groups is what creates all the drama. So, let's check out that first path. What do the pros know? Why do they almost always choose to get in and get out super quickly? Well, there's a very clear logic behind their need for speed. Selling early is what we call the pros play, for a few key reasons. In those first couple of days, liquidity is high. That just means there are plenty of buyers around, and it's easy to sell. Crucially, the price of the rights sticks really close to that simple formula we just saw, its theoretical value. This makes it the safest, most rewarding time to cash in your rights, and most importantly, to avoid what's coming next. And that brings us to the second path, the risky wait. This is where the tension really starts to build, because waiting until the end of the trading window sets a dangerous trap. There is a very, very high cost to procrastination here. I mean, just think about it. The clock is ticking down to the final hours. What do you think happens when everyone who has been putting this off suddenly realizes they're out of time and makes a mad dash for the exit all at once? It's pure chaos. A massive, overwhelming wave of supply just floods the market. All of a sudden, everyone is a seller, and there are hardly any buyers left who are willing to take that risk so close to the deadline. It is a textbook case of too much, too late. And this chart shows the brutal result. This is the late-stage dump. Just look at the value on day one, trading high and right where it should be. Now, look at the final hour. The value has completely fallen off a cliff. That built-in profit we were so excited about, it's just gone. Evaporated. So let's be crystal clear here. The price doesn't just dip, it crashes. Because of that flood of sellers, the rights entitlement often ends up trading for just a tiny fraction of what it was supposed to be worth. The opportunity is destroyed simply by waiting too long. So after seeing the two paths, the calm, profitable early window and the chaotic, value-destroying danger zone, the winning strategy becomes incredibly clear. The verdict from the market is simple and it is direct. And here it is, the key takeaway from this whole thing. If you're selling the rights, early is usually better. The pros aren't just being cautious, they are playing the odds. By selling early, they capture the value and they completely sidestep the predictable chaos of that deadline rush. And that wraps up our look at this ticking clock choice. Thank you so much for watching, and we'd love for you to revisit us at King's Academy for more educational explainers just like this one. And hey, Let us know what you think of the content down in the comment section. Your feedback really does help us refine our content for the future. Also, if anything was unclear, please ask. We read every single one of your comments without exception, and we'll address any questions as soon as we possibly can. See you in the next one.